Interview with the Chart Guy. Okay, hi everybody. This is Louie, and I've got a special guest on today. This is Brian. He's calling himself the Chart Guy, but he has been a follower for some years on YouTube, and he offered to do an interview since he has many years in technical analysis. And I thought it'd be great to get another perspective from another stacker. So, hi Brian, how you doing today?
Hey, Louis, good. Yeah, thanks for having me on. Appreciate it.
Sure. And so we may want to, before we get into the charts, we may want to say how we're developing a relationship. Brian and I are currently doing a trade. We're trading Libertads for more generic silver. I'm happy to say I just got notification that your package has landed finally. So I should be able to pick that up today.
Okay, great.
That's good, and I'll do an unboxing of what Brian traded me. I've been selling my Libertads since I've owned them for some time, and there's a handsome profit in there for me. And he is collecting Libertads, and one of the cooler ways to work in the community is to just trade, what you don't want for what you do want. And then there's no eBay fees and things like that. So it's a win-win for both of us, I hope. So I'll show you guys that unboxing next week probably. But why don't we get on? And Brian, do you want to just tell us a little bit about yourself?
Yeah, sure. So my current profession, I'm in automation and engineering, manufacturing. Been doing that for the last 15, 20 years, but I've also been very passionate about the markets and have been studying the markets since the mid 80s. I've looked at a lot of different technical analysis and found that charting actually provides me with best perspective on the markets with respect to potential opportunities, what the market is doing, and more importantly, what the market is likely to do in the near and medium term.
And it looks like from the chart that you put up here that you're an Elliott wave chartist. Is that correct?
Albeit that I am very familiar with the Elliott wave theory, I don't use the Elliott wave count because it's just too subjective. But there are a lot of significant characteristics and rules from Elliott wave that you could apply to charting. And so I've taken some of that from the Elliott wave as well as John Murphy's technical analysis. And, everybody looks at charting a little bit differently. You can get a dozen guys looking at the same chart and you can come up with a dozen different scenarios. So I've applied some very simple, basic rules to when I chart. And they've worked out very well for me. So, and if you want to talk a little bit about what's actually the daily pattern that I've got on the screen right now for silver.
Yeah, sure.
Okay, so, you hear some other YouTubers and very prominent technical analysis. They mention, the silver chart and the gold chart pattern. And looking at both, unfortunately, I don't have the gold chart pattern updated. I don't pay as much attention to gold as I do silver for a variety of different reasons. But the silver chart pattern, providing that it stays within the upper and the lower trend line, is one of the most best chart patterns that I've seen in the commodity space for a long time. So for those that haven't, or maybe not that familiar with charting or exactly what the behavior of silver has done in the last few years, we kind of had a very fast spike down happen in March of 22, and that correlated with an enormous drop in the stock market where everything got sold off. Silver traded just below $12. That was around the middle of March, and then within 5 months, it impulsed all the way up to 30 in the beginning of August of 2020. So over that 5-month period, silver rallied $18. And ever since then, we've been in a consolidation pattern between 30 and basically $22. And you look at the consolidation pattern here, it's all made up of a series of wedges. So from the top of wave 1 at 30 down to wave 8, there's typically a 3-cycle pattern, an ABC down, and that was in the form of a falling wedge. And then there is a series of waves to the upside that overlap. That was your B wave, that's a rising wedge. And then we see the B wave kind of opened up into, after it topped out into a ABC, another falling wedge that we made a little bit over a month ago that we just broke below 22. And now we're putting in a bottom, and it should rally back up to around the 26 and change for wave D. And then the last turning point for this pattern would be wave E. That could be a Fibonacci retracement of the low from C to D, and maybe in around the 25 area range. So, and I also use a line chart. I don't use candlesticks or open, high, low, close. I just like to use a line chart because it reduces a lot of the noise. It's a little bit cleaner, and it's just based on closing prices of the market.
Very good, very good.
Yeah,
so you're actually bullish then.
Well, extremely bullish, extremely bullish. Now, the key here is, for that bottom trend line is the market, it could trade back down, retest the lows, slightly below 21. If it ended up making, it actually could go a little bit lower. You look at the bottom trend line, it's almost horizontal, but I'm giving it, there's a slight slant to it. If it was completely horizontal, that would be more like a flat pennant. It could go a little bit lower. It's not going to hurt the pattern at all. It does go a little bit lower here and make a new low for wave C. All that does is extend the time that it's going to take to complete this pattern. But if it looks like the lows are in, even though we've had a pretty good sell-off over the last 2 or 3 days, that is not untypical of silver before it actually see it take a big jump to the upside. So if we're saying the lows are in, it's just going to claw its way back up to to 26. That could take several weeks, and then maybe sometime in the March timeframe, we might actually see a shallow move back from 26 down to 25, give or take. Once that E wave is in place, then the pattern is pretty much done, and then we should see a breakout above the 26 upper trend line. Everybody's looking at 30, but the 26 is the actual major resistance that silver will have to overcome. And then once it breaks and closes above 26 and proves itself by staying there, for example, for 3 or 4 consecutive closes, it should go ahead and attack the $30 area and take off. And it's going to, then when it does, yeah, okay, go ahead. I'm sorry, a little long-winded, but
no,
yeah.
No problem. We all have that $30 number in our head, but truth be told, it only kissed that number for a nanosecond. It really never, it's probably not fair to expect 30, since it didn't spend much time up there.
Well, that's true. I mean, if you look at a candlestick chart, it hit 30 back in August, and then last February of 2021, when they were the silver squeeze from Wall Street Reddit was underway, it actually touched 30 again, but then it quickly sold off after that. But that is that is the high. I mean, that is the most recent high for the what we've seen over the last 2 years. So that everybody's just kind of focusing on the $30 area, but I'm looking at right
Yeah,
around 26.
and I was thrilled to see it at 24 and a half recently. But we have our nemesis, which is the dollar, and I know you follow the dollar, the Dixie as well. Is that our kryptonite? Is that what's going to derail us?
No, I don't think the dollar is going to impact gold and silver like well, you could you could overlay gold and silver with the dollar chart, and you'll see some correlation where the dollar, as it gets stronger, the gold and silver will sell off. They'll move inversely to the dollar. You do see some major bottoms and tops, but with respect to the dollar, it's if you look at the way it's behaving right now, it's been in an uptrend for the last few months, and it could provide a little bit of a headwind for gold and silver. But the fundamentals are, I think, too bullish right now for both the metals. They're basically just biding their time. I don't think the dollar will have that much of an impact because if it moves higher, I'm expecting the move to be somewhat short-lived before it starts to roll
over. And yeah, I think it is. It definitely could move down here a little bit. And I heard a video yesterday from the CPM group, which most people I don't think follow, but they were saying that the inverse correlation between the dollar and silver is only true a third of the time. And I thought that, well, that's contrary to what everybody thinks, that, dollar up, silver down. But I think, if you take a longer term perspective, it doesn't really hold.
Well, and that's true. And you just have to look at the data. But everybody the gold and silver is priced in US dollars. And, and then typically as the dollar moves, gain strength, the other commodities. So it's just not gold and silver. This would be also correlation to other commodities such as oil and your grains, etc. Whereas the dollar moves stronger, should be able to have more buying power. Where you see those commodities would then start to show some weakness.
And I think maybe some of us feel that way because it sure seems that whenever the dollar is strong and interest rates are ticking up, the smackdowns are, pretty intense. And I tend to believe in manipulation more than most people. But, if there's a good reason to smack silver, it seems like they smack it as hard as they can. Or maybe the market just anticipates it and does it anyway for them. I'm not sure. What are your thoughts?
Yeah, no, you brought up a good point. And I think some of the big short sellers, as the bullion banks, they know that. So if you've got some weak hands that are long with speculators, and they know where all the stops are. So if there's some news that gets broadcasted and the market doesn't immediately react possibly to the upside, then I think they take advantage of that news, and then they actually put a lot of selling pressure, and put more short sales on, which drives the market down. So you often see this during the Fed speak, and they'll wait, and then if the market shows any sign of vulnerability or weakness, where maybe some of the weaker hands that look like they're maybe got some, or maybe they move their stops up or look at liquidating or selling off some of their positions, that the banks be all over that, and then they smack it down. Then there's just a vacuum underneath there.
Yeah. Now, do you follow the stock market at large as well?
A little bit, Louis. Not too much. I look at the chart and what the Dow Jones has done over the last 2 or 3 years, and you can It's just not, it's not a natural progression for a market to not have any significant type of correction. Basically, it has almost gone in a straight line over the last 2 years. That's not healthy for any market.
And it's no secret that all the major averages are in a downtrend now. Do you think that ends much lower than where we are today, or do we shake it off and go back up?
Well, if we look at past history, if the Fed continues to follow out on their word where they're going to raise interest rates and see how aggressive they are in raising interest rates, there could be a breaking point. But Powell did this a few years ago. He raised interest rates, by 1 or 1.5%, and then the markets just, puked, and then he had to go reverse course. Where interest rates are so low, historically speaking, that they may have to go up to, maybe on the long bond, the 30-year. It's just a little over 2% right now. If it gets up to maybe around 3 or 4%, so there might be a little buffer for the markets to move upwards with interest rates. But if we get close to 4%, I think that's just going to hurt the Dow Jones and the other indexes, whereas it'll start taking a lot of that liquidity out of the market, and investors are going to start getting spooked. And we'll also should see the bond market start to roll over as well. It would be not a good time to be in bonds if the Fed is going to continue with interest rate policy.
And most people are in stocks and some high-flying stocks and bonds. And some people are in crypto. A lot of stackers, I guess maybe 0.25% of stackers these days also own crypto. Do you have a thought on crypto, or is that out of your bailiwick?
No, I don't like crypto, to tell you the truth. Not that it takes away or detracts from gold and silver. I just I don't see the intrinsic value that some other investors see in crypto. There's the blockchain behind it. I think that that's something that will eventually continue to use with digital currencies or transactions. But Bitcoin itself, it's backed by Tether, and there's not enough US dollars that actually support from a 1-to-1 ratio to support all the Tether that's out there. So for me, I see Bitcoin as somewhat as a bit of a Ponzi scheme. There's just not enough US dollars backing the Bitcoin. If everybody wanted to sell out, we definitely have a liquidity problem.
Right. And I did a video a couple of weeks ago where I indicated that silver and crypto do have something in common, and it's not a good thing. I think it's that the whales that own the majority of the crypto have all the power, just like the bullion banks can write naked shorts. I think the whales can manipulate that market any way they want.
Yeah, there is a lot. The number of whales in Bitcoin do hold if not a majority share of Bitcoin, pretty close. So it's not like it's dispersed, across a lot of different investors. I think it's mostly used for speculators. It's kind of like you want to put an analogy to it, like the tulip bubble that experienced back in the 1700s. I'm looking at, but I do follow because I do like charting. I put different markets to that, and what I see with Bitcoin is it's just making a very big topping pattern, which is going to reverse the trend. And I think once it completes this topping pattern, it still takes several months. But once we start moving back to the downside, and the probability is there that it will, is it could go significantly lower. I don't want to say how low, but certainly maybe get back to the lows that it had a few years ago. around
And it
5,000.
probably wouldn't take it probably wouldn't take much to all the companies and that are predicated on Bitcoin or predicated on crypto, buying crypto, trying to use crypto. If the downtrend continues, won't take much for them to go out of business, I think.
Well, yeah, and you've got a couple of investors in there like Michael Saylor. He's got a huge investment, or at least his company does, with MicroStrategy and Bitcoin. And at some point in time, I mean, he needs to be very cognizant of the fact that Bitcoin starts to, and there's a lot because of the volatility in Bitcoin. It starts breaking through a certain amount of support, and I think it's around 30K. I think that's where his break-even point is. So if it starts dropping significantly below the 30,000 level, his crypto investment with respect to the amount of crypto that his company owns could be very detrimental to his company. So and he's got a fair, he's got a fair amount personally as well as company.
Yeah, and you can only double down so many times. I mean, unlike silver and gold, where the long-term trend is tried and true and tested, and I mean, we may not live long enough to see it. I don't know, but it's not going to zero. So I'd rather be where I am as opposed to where he is right now.
Oh yeah, definitely. Silver is it does have a proven history and track record of wealth preservation. One example that I like to use, if you go back, 30 years or so, when gas was like 35 cents a gallon, you can take a dime, constitutional dime or pre-65, which silver trading at maybe around $4 an ounce back then. One dime could buy you basically a gallon of gas. And if you look at today, where gas is, it's a little bit over $3. The silver trading bonds around between 22 and 25 could still buy you a gallon of gas. Whereas the dollar.
Well,
yeah, go ahead.
Go ahead.
Well, I'm saying
go ahead.
whereas the dollar, shows you how much the dollar has devalued, where it took 35 cents and now it takes well over $3 to buy a gallon of gas.
Yeah, it's just ridiculous how quickly the dollar is burning. And people still bet against precious metals, with that macro backdrop. Maybe there's something better you could buy, but I don't know. Real estate's looking kind of toppy, and the stock market is not somewhere I want my money today. Like you said, the bond market's at a 30-year high. I'm not sure. Maybe we should be buying Jim Beam.
I've got plenty of that too. So, yeah, but you're right. There's not a lot of investments out there that are in the same situation that gold and silver are in right now. Real estate is somewhat overvalued. I mean, I'll exclude farmland because there's value in farmland. But yeah, the stock markets are extremely overvalued. Bonds are in a bubble, and if they've been in a bull market since 1980 when the long bond topped out at 20%, and we basically went from 20% over the last 40 years down to 0%, and now that reverse is turning. And I think interest rates are going to go much higher. And before all this is over, we could see interest rates maybe well over 20%. And that won't have anything to do with the Fed, but it'll have everything to do with the fact that the bond market, vigilantes out there, there's no buyers for bonds. Nobody wants to hold US dollars, and that I think is going to drive interest rates considerably higher. But I don't think that's going to have any impact on gold or silver, even at 20% or more. If at that point in time, we may see a loss of confidence in the US dollar where we view it as Zimbabwe dollars. So, if that's the
Yeah.
case, it doesn't matter
Well,
how high interest rates go.
yeah, but if you can't pay the debt, and you can't pay the interest on the debt, something's really going to change at that point. And of course, it's not just the interest rates; it's the real interest rate, considering inflation. So, right, I mean, even if they raise interest rates to 2, 3, 4%, they're still not getting in front of inflation, and the purchasing power of the dollar is still dropping, right?
Yeah. Yep. The Fed, they don't. Federal Reserve does not really control the interest rates like everybody believes. When people say, "Oh, the Fed is behind the curve," it's because the Fed truly is behind the curve, whether it's hawkish or dovish monetary policy. They basically follow the 10-year and the 30-year bond. One of the reasons that the Fed has actually come out with a more hawkish stance about not just backing off, move more aggressively with the tapering, but also with increasing interest rates, is because the 10 and the 30-year have over the last several months been moving higher. So without making them look like fools, they have to go ahead and change with what the market is actually doing.
Right, and they have to answer to Congress, and the sanctimonious Congress and leaders of our country sit there and criticize the Fed, but don't think a minute about all the spending that they're doing. They would never stop spending. Oh my God!
Right. No, sorry, that was me.
Oh, no problem. I can cut that out. Well, why don't we switch gears here real quickly, and tell us, I take it you're a stacker or a collector. What are you picking up these days besides Libertads?
I like to, mostly it's government coins. I like the Royal Canadian Mint, the British Royal Mint, the Libertads if I can get them, and Perth Mint. So I've been stacking physical silver since about 2002, about 2007, 2008. I ended up exiting my position in 2011 when silver was going somewhat exponential. I saw that wasn't sustainable. I took advantage of the move, liquidated my position. Then I started stacking back again in 2013 after we came back down into the teens. And so been stacking ever since the last 7-8 years.
Yeah, you had. So we're trading some nice coins, and I see you have some lunars in that stack. Don't you think the lunars or the mintage is just too high for the modern collector market?
Well, when you compare it to some of the other different mints, that they're come out with maybe 15, 20,000. The Korean, the Cosmo Mint, some of their coins are 30,000 or less. The bullion coins, typically from the Perth Mint, are like what, 50,000, or they try to cap it at around 50,000 or so. Some have unlimited mintages, but then as soon as that, typically they won't mint anymore after that 1 year expires. But because it is unlimited, if there's demand for it, they go back and mint more. But I think,
Yeah,
go ahead.
There have just been so many more entries into the market. I think they're competing for a tighter market. And I used to be a big follower of the kooks and the koalas, and I have my share of lunars as well. But I've been kind of disappointed since they never really brought down was it 300,000, or 500,000. It's just, we're in a whole different time now in collector coins, I think. And I really wish they'd get more current with their mintage caps so we could buy their beautiful coins. They have the best looking coins on earth for sure.
Yeah, they do have a great design on their coins, but yeah, some of their coin mintages are in the 300,000. When I was talking about the 50K, I was thinking about some of the Kookaburras that they, because I have some of those as well. But I think what's hurting the market with respect to collector coins is that there are just too many mints coming out with so many different type of collector coins that the market is getting somewhat diluted. So I'm not looking at, I'm pretty selective then when I go out. If I'm going to buy some type of collector coin, I'll usually stay with a government mint, and then providing that the premium is fair and reasonable, then I'll go ahead and jump in.
Well, we certainly had some deals yesterday on the Maples and the Britannias and a lot of the sovereign silver coins. It was I was like a kid in a candy store. I just kept, me and a friend were just doing it all day long. What about this? What about that? And I said, I'm not buying anything unless it's $2 over spot. And then a whole bunch of stuff became available at $2 over spot. And then I went ahead and bought that 10-ounce completer coin instead. So I kind of spent my money on that.
Good for you.
But that's a beautiful 10-ounce coin. I've got a collector in me as well, but I'm trying to wind down my collecting as I get closer to retirement. And it's just, I just don't want to leave a collection to my family that they won't understand or know how to sell.
Mm-hmm. Yeah, because if you're paying a little extra premium for for those collector coins, that's more of a selective group of buyers that you kind of have to focus in on.
Yeah, and they do well, and I certainly can't complain about the profits on a lot of those coins. But it's interesting, if you're expecting a run up in silver price. I just saw an interview that T, the silver stacker, did of a coin shop owner, and she confirmed what I've always thought, that when the spot price rockets higher, basically it doesn't really matter if you've got a Kookaburra or a 10-ounce bar. The difference is going to shrink. That premium is not going to be as significant when we get into just rapid increase in spot price.
I remember when back in 2008, I believe, when the stock market was rolling over that summer, silver was at $21 in March, and then it went into a tailspin over the next 6 months, went all the way from 20 and traded back down to 875. That year kind of sticks out for me because I was still buying quite a bit of silver, and most of my sales, or when I go buy, is with the online dealers. So I remember going to Atmex, and they actually had no inventory left when this was probably about August or September timeframe. And it was just completely sold out. And then I started getting emails from Amex asking if they could buy back my silver. And some of the premiums that they were giving me on Eagles were like $8-9 over spot. So I think some of the government coins will still command a higher premium, potentially than maybe constitutional or generic.
Right, but that Chiwu, may not be in the same category as some of the sovereign coins.
Yeah, yeah, but
But
when we see silver start to really take off, I think it doesn't matter what kind of silver you have, the premiums are, you might see 100% on the premiums. It's just going to be impossible to get silver once. I think when we have the next real silver shortage, whatever will be the trigger for that, and you see the physical silver just it could be a light switch, be an overnight thing. You wake up and you want to go buy some silver from your typical online dealer, and he's not going to have it. His inventory is going to be pretty much zero.
yeah, that certainly could happen. It doesn't look like it's happening right now. I see millions of ounces sitting out there on the shelves. I'm surprised by all the videos that say that silver's in such short supply. Boy, I sure don't see it when I go shopping.
Well, if you see, it depends on some of the coins. I mean, the government coins, like, yeah, there's a lot of monster boxes out there for both Canadian and, the U.S. Silver Eagles. But some of the other selective coins that I look at, designer coins, the privies, the libertads, go try to find, tell me which online dealer has any lit libertads, for sale. Amex has a few, but the premiums that they're asking are just completely outrageous. So,
Oh yeah, yeah. Hey, I noticed when we did our swap that you didn't seem to be interested in the proof Libertads. Is there a reason for that?
I just don't collect the proofs, the proof libertads. The BUs. So when you look at the miniatures for the libertads, the BUs are extremely low mintages, and they do very well against the proofs. But the premiums are, if you get them when the coins first come out, regardless of what silver is trading for, is your best chance to get a decent price with respect to the premiums. But as soon as they're released, then over time the premiums really start to move.
Yeah, I've agreed. I agree with that. I have bought my share of proofs, but in terms of return over the years, I've been stacking for about 9 years and collecting and flipping, and the profits from the BUs have been probably 5 times what the proof profits have been, and then the proofs can spot as well, which is you don't want to get $300 into a 5-ounce proof and then find a big spot on it 2 years later.
Yeah.
So I'm moving away from proof libertads, that's for sure.
Yeah, there's a market for them, for sure. But if you like I said, if you just look at the miniatures for the bullion coins, like last year, the 5-year or the 5 ounce was around 9 or 10,000, or and that's kind of typical for the BU coins, which is for a government mint, and where it's only minting, maybe between 7 to 12,000 is extremely low.
Right, and the gold. Notice the BU gold seemed to be a lower mintages, relatively speaking, than the proof gold this year or
Yeah.
2021.
Yeah, the gold and gold libertads also do extremely well. If you could get them from a fairly good price, where I live in Texas, I get a chance to go into Mexico, and I'll go and try to buy some of the bullion from the Mexican banks. That's something that they still are able to do as a Mexican citizen. Is pretty much all the banks in Mexico you can buy directly from the banks. But the last few trips that I've had have been somewhat unsuccessful. They just don't have them either. So have to wait till the 2022s come out, I guess.
Right. And then there was that rumor last year that they weren't going to be making anymore, but that may have been what made the market catch on fire. I'm not sure.
Yeah, I heard that too. But the Banco de Mexico, that's in Mexico City. They have a plan. They know how many of the different fractionals and the 1, 2, 5 ounce and the kilos. They have a plan as to how much they're going to mint for that particular year, and then they basically stick with that plan. So we've seen the 1 ounce anywhere from 300,000 mintages, and in some of the past years, well over a million or so, which is very high for the Mexican mint. It's kind of unpredictable, but when you last year was the lowest mint for the 2000, or sorry, the 2 ounce. I think it was last year. The 2 ounce was only like 5,000 or so, or the 2020. I think the 2020 was about 5,000 mintage, and that was the lowest in history for the Mexican mint. And that's why it was commanding such a high premium.
Yeah, that was a good year for buying and selling, and I really bought quite a few. I happened to catch the APMEX release of the proof gold that year, and actually I caught the release of absolutely everything, gold and silver. I must have been buying from 4 different retailers off and on, and just everything I bought on fire after I bought it. So that was a good year.
That's great when you can do that. And then especially when they come out and when they announce the mintages are super low, you've got instant premiums built into those coins. You don't have any problems.
Yeah, I know. Whenever they announce a release, wherever I am, I pull off the freeway or whatever I'm doing, and I do that first.
Yeah, but I don't think. Yeah, go ahead.
Oh, I was going to change topics here. Go ahead, finish your thought.
Well, we used to see those, those flash sales. I mentioned that, in an email recently where Amex was famous for doing that every year. I think they were looking at whatever old stock they had in inventory and just letting them go at a ridiculously cheap price while they were going to bring in the new year. But you don't see that anymore from, unfortunately, from some of these online dealers. But yeah, they used to offer those type of sales, and I'd wait patiently for Apex to come out and do a flash sale on Libertads. But yeah, no more, unfortunately.
Yeah, so true. And oftentimes the release price is way higher than it used to be on the new stuff. I noticed that at Monument, they opened up their gold Libertads at pretty high prices, so there was no ability to get in on the ground floor there.
Yeah, for sure.
Just wanted to talk a little bit about gold, and you probably know that I follow the GSR, and I do that because I tend to get excited about moves, and I was doing exactly the wrong thing when the silver squeeze was happening, because I really thought it was going higher. A lot of us did, but the GSR always tells the truth. Right? When the GSR is high, it's time to buy silver, and when it's low, probably time to sell, if you are a selling kind of person. What do you think about the GSR and where we are right now, and gold's attractiveness as well?
Yeah. So I look at the GSR as being a very important indicator to where we are in the bull market with gold and silver. So certainly when you say the GSR is high, for example, if it's 40 or 45 or for higher, that just basically is telling you that the relationship between the price of silver to gold. Silver is cheap related to gold, and buying silver is a better buy. You've got better opportunity than when GSR starts to drop. You go ahead and convert your silver into gold and get more ounces of gold. So even if you're a strong gold bug, and as tempting as it is to buy gold, especially we get to see some of these pullbacks in gold, as long as that GSR is sitting where it's at, like for example, right now in the 70s, 77, 78, silver is just the better buy. Eventually, when the bull market starts to mature and peak out, the GSR is going to be a lot lower than it is now. And then when you convert your silver, you'll be able to buy just more ounces of gold. The other thing that I like to use the GSR for is as an indicator where we are in the bull market, as I mentioned earlier. So when it's in the 70s like this, we're in the very early stages of the bull market. And I do believe that before the bull market for the precious metals is all said and done, we'll see the GSR at least back down to 15, if not back down into the single digits. And the reason I say that is because of the fact, not only because I think silver is going to fundamentally is going to be a lot stronger than gold, because it is seen as not just a monetary but also an industrial metal. So it is critical to industry, especially we have a significant silver shortage. But going back to where the GSR bottomed out at 125, a couple of years ago, that's when silver dropped below $12 in relationship to gold, and gold was in the 1400s, and 125 took 125 ounces of silver to buy 1 ounce of gold. So the GSR was extremely out of balance. And when a market gets out of balance like that, it has to find equilibrium. But because the market is always trying to find fair market value. But you see these violent swings in the market, and you can pick any number of different markets. So the 125 was abnormality within the GSR. And at some point in time, the pendulum, I look at it like a pendulum, the pendulum's going to swing the other way to make up for that abnormality, but it's going to swing in the opposite direction, where we could see the GSR actually go down to 10 or maybe in the single digits. Other examples where the market did that was back in 2008, when oil hit $140 or $150 a barrel. And then 2 years ago, it was negative $40 a barrel. And now we see oil back to almost $90 a barrel. So you see a lot of volatility and swings in the market. We see that swing with the GSR, and I think when the GSR does get back into start getting into 20 or lower, that'll be an indicator that we're getting very close to the bull market maybe topping out with respect to gold and silver.
Well, that would be nice. A lot of us would be definitely pretty happy if that happened.
Yeah.
And I know that, I mean, that would be, boy, that's like your dream come true, right? But do you think, a lot of people think that silver is going to keep going down, and clearly you think there's a bottom here. Do you think 80 is a reasonable top at the GSR right now? It's bounced off 80, 81 a few times now, and I get a great deal of comfort from that, even though silver is dropping. When it does that, do you think 80 will hold?
Yeah, it's tested that several times over the last few months, and it looked like the last week about a week and a half ago, we saw a pretty good drop in the GSR when silver was climbing back from the 22 area up to 2450. It was taken off, and gold was moving higher, but not at the same pace or percentage that silver was. So I'm just looking at the price chart for silver. I'm still pretty bullish. We're seeing some weakness, but it's getting oversold. And if the other technical indicator that I like to look at is looking for a bullish divergence in the market with the RSI. So the RSI is just a relative strength indicator, and when you want to look for so many technical indicators are lagging indicators. What you want to try to look at is a forward-looking indicator, and the RSI, when you look at a divergence, provides that. Where, example, if the market at the silver price made a lower low, but the RSI made a higher low, that would be a bullish indicator, and that's a prelude that the market's going to turn around and start moving higher. So, I don't think there's that much. But to your point, I don't think there's that much downside left in really in the silver market right now, where we are on the daily chart. I think it's going to start to turn around.
Yeah, and I like that 80, GSR, and I have in the past traded gold for silver. That's why I like generic gold, because the premiums are low and you can sell it easily at the coin shop and just turn it all into silver. And that's worked out well for me in the past. I would do it today. I mean, if I was at the LCS, I wouldn't mind trading some gold for silver. But a lot of people like their gold. They don't want to trade it away. Once they get it, they hold on to it.
Yeah, you can't blame them. You can't blame them for that. It's something that but you don't want to fall in love with the investment. So, if you are looking at silver and gold as a vehicle for creating wealth and increasing your wealth, then take advantage of the fact that when you have the GSR swings, and because they may not stay up there very long. So if we did have a big pop up in the GSR where it went up into 85 or so, yes, that would be a great opportunity, to sell your gold, and then 1 ounce of gold will get you 85 ounces of silver. Likewise, GSR gets down to 40 or lower. That's when you start buying gold. And if it really tanks, then you go ahead and take your silver, which is then very expensive to gold, and go ahead and convert your gold back into gold bullion.
Yeah, that's definitely my goal as I get older. I definitely am looking for that swing to increase my gold holdings dramatically. But now, is not the time, in my opinion. I'm putting everything into silver right now. If I buy gold, it's just because it's a tremendous opportunity of some kind. But the gold will come, I think, after silver does its thing.
Yeah, well, gold will lead the market, and gold is already traded at 1920 back in September 2011, and silver hit its high back in April, but it was not able to break a new high of $50. And then last year's gold hit, or in 2020, gold hit around 2080 for a high. And so gold has been continually making, new highs, and silver has been capped by that $50 area. But once it breaks through the $50 area, it's blue sky for silver.
Right.
And I think from a percentage basis, it'll catch gold pretty quick.
All right. Well, it's been really nice talking to you. I'm sorry it's hard to do this and make it short. So thanks everybody that hung around and listened to this full discussion. And Brian, I'm going to head off and grab your package and get your package in the mail, so that you can get your Libertads. And anything else you want to add to the conversation before we sign off?
Yeah, no, I just, for those guys that are silver stackers and gold stackers, just hang in there. Though I think the market is the long consolidation period that we've seen over the last 18 months is very getting close to maturing, where I think both the gold and silver are going to break out here fairly soon. And when silver does break out above that 26 area, I think it's going to go test the $50 mark pretty quick. So just, if you waited this long, just be a little more patient, hang in
Yeah,
there.
and that silver squeeze, it pushed forward a lot of purchasing. And it doesn't surprise me at all that we fell back at this point, because everybody spent every dollar they had, right? And some people are even selling now, being disgusted with, they paid the $30 plus another $10 premium, so they've lost big on that. But I think we're right where, we should be, and I think it would be very reasonable to expect appreciation from here, and that's what I'm hoping for.
Yeah, just need to hodl. Just hodl your silver.
Yeah, and then you really got something to hodl there. It's real.
Yeah, for sure. Okay, well, I'll let you get going. I appreciate having the opportunity to speak with you, and you have a great weekend.
Maybe yes, and thank you for sharing. Would love to, and I'm always open to interviews if anybody would like to get on my show and give a fresh perspective. That'd be great. All right, Brian, nice talking with you.
You too. Take care. All right, bye-bye.
Okay, bye-bye.